Hey guys, welcome to MB.Cryptocurrency. In this video, I'm going to help you to understand how you can do your on-chain data analysis and then how you can mix it with your technical analysis to get the best results. The good thing about this video, all the metrics that I'm going to mention is going to be for free. The reason is a lot of people think that they have to have a paid subscription in order to use on-chain data, and I'm going to prove it in this video. That's not true. You can use very good and important metrics and absolutely for free. There's the two things you have to consider this before we actually start a video is first, nothing in this video is a financial advice, and second thing that you don't use on-chain data itself to get a buy or sell signals. You just use it as a confirmation with your technical analysis. So that's, you have to keep that in mind. If you enjoyed this video, don't forget to like and subscribe and press the bell notification. Let's get into it. All right, I'm going to divide this video into three sections, which is first about the healthiness of the blockchain, the second about the security of the blockchain, and third one is about supply and demand. And I'm going to purely stick on the blockchain itself. I don't really mention any altcoins. I don't want to make this really complex. So first one is about the healthiness. What are we looking for is we check the number of active addresses and new addresses, which you can find it on a Glassnode, and I'm using 7-day moving averages because if I put 0, it has a lot of noises. I don't know how someone can do any analysis with that. So why this active address is important? It is important that, for example, we consider that Bitcoin is like a company that has a product, and the product is BTC. If less people interacting and just buying the product, right, that means the company is going to be less profitable gradually, right? So if there are less people using it, less profitability, and the company might go bankrupt. It's same as with Bitcoin as well. If less people interacting or like buying or selling, that means the miner is not going to have much of a profit. If they mine, if they don't get much of a fee from the transaction, that means the miners actually might stop their computer because it's not going to be profitable, and that decrease the hash rate and followed up by decreasing the security of the blockchain. So that is very important that you have to consider looking at the active addresses. So as you can see, it was a drop, and then it was a little rally in here, and then a little drop in here. As you can see, there's a little divergence between the price and the active addresses, which is not a really good sign. Consider that there's a pivot in here. I want to see in a couple of days what's going to happen, especially when the Bitcoin price reach in 29,000. This is a 4 hours time frame supply zone, which is you can consider as a resistance area. So this is what I'm going to look for to see if it's going up or is it continues to go down, which is gives you another signal. And that's what I told you, that you can use the on-chain data as a confirmation with your technical analysis. So this is what I'm going to look for in a couple of days. Same as the new addresses. New addresses has a little rallies going up, but as you can see, it didn't really cross this peak, which is somewhat give like a same vibe of active addresses, but there's a little recovery in the new addresses at last. So there's a little positive sign in that at least new people are getting into the blockchain, which is good. That was about the healthiness. Second thing we're going to speak and discuss is about the security. So what secures the Bitcoin blockchain is about the miners. So if there is more miners running the computational power, that means the hash rate increase and the Bitcoin blockchain becomes more secure. As you can see, again with the 7-day moving averages, the hash rate continues to uptrend, but at the moment there's a little downtrend, which is I'm slowly, thinking about maybe they start to be a little selling pressure from the miner, especially when you look at the difficulty. Difficulties at the moment it's the all-time high, which is it's got to be harder for the miners to running their system, right? So this is what I'm getting. If I see it breaks below this low and it's confirmed it's gonna stay below this level, that gives me a signal that, hey, maybe miners are slowly turning off their computation. Not all, like a few. So it's got to be gradually going down. That sends me a signal that, hey, I have to watch what's happening with the market. Now, let's check the miner reserve. And the second website we're going to check is cryptoquant.com. It's same as, it gives a lot of good information. It's even better than Glassnode, because Glassnode is just, there's a few metrics, there's a few T1 metrics which is for free for everyone. Cryptocurrency, it has a lot of metrics which you can go and check, which I'm going to show majority of metrics that I'm going to talk about for today. It's from the Cryptoquant, so I highly suggest to use a Cryptoquant. It's absolutely for free. What I'm looking for is a miner reserve. So we get an idea that hash rate is possibly can go down, especially if it breaks below this level. The miner reserve slowly has a trending to go down in past couple of maybe a week or 2 weeks. So slowly going down, right? Especially when the price is going down, the minor reserve going down. As the price is going up, minor reserve going down. So there's another signal that I have to keep watching the hash rate and what's happening with the minor reserve. In a couple of days, I have to look into it. The next one is the minor net flow. Let me turn on this. So basically, if you open it up, you should have to see something like this. If it is red, that means miners are sending their BTC out of their wallet. If it is green, that means miners are receiving more Bitcoin into their wallets. So if it is red, that means possibly they can be more selling pressure. If it is green, that means everything's fine. At least there's a signal that everything could be fine. There's no absolute certainty in anything. So as you can see, there's a lot of signal up and down, up and down. It doesn't really give us that much of a sense what can happen. So what I'm going to use is SMA 7, which is 7-day moving averages, to see if it is below 0 or above 0. If it is below 0, that means miners are, in past couple of 7 days, if you use this, for example, SMA, are sending more Bitcoin out of their, so there's more outflow than inflow, sending Bitcoin out of their wallets. So that's giving me another signal that, hey, maybe miners are slowly selling as well. This is what we could see in here as well. It's another signal. How we can get a confirmation on this, also we can check the miner to exchange flow to see how much miners are selling Bitcoin to the exchanges. So as you can see, there's a couple of picks we could see in past couple of weeks, maybe in a week when the prices started going up, there is a more outflow from the miners' wallets into the exchanges. So that's giving another signal. So I told you, the hash rate could possibly go down. We have to look because the difficulty is at its all-time high, right? And at the moment, price is in the resistance level. And as you can see, miners are sending more into the exchanges because we can see a couple of, spike back to back. So that gives us as a signal that, hey, maybe opening a short position will be more favorable rather than opening a buy position right now. So this is how you can use it. Okay, we already explained about the first two section, which is about the healthiness of the blockchain, and the second one is about the security of the blockchain. Now the third aspect we're going to explain is about the supply and demand, to see what's happening with the market, about the buyers and sellers. If there was the sellers, did they sold the profit or the loss? For this one, we're going to use the adjusted SOPR at the CryptoQuant website again. And basically it's about adjusted output profit ratio. And if the value is above 1, that shows that the investors sold at the profit. And if it is below 1, investors sold it at a loss. Why is it important is that if people are selling at the loss, that gives us a signal that there might be even fear. And if it's sustained to be below 1, especially if you use moving averages to find out, that gives a signal that people continuously sold their Bitcoin at a loss, and that can adds up, especially, for example, if the price reaching to the level of resistance. If this trend continues to go down and the SOPR would remain under 1, that gives us a signal that, hey, this downtrend might actually continues and there might be more pain following up. Another thing that I usually check with the adjusted SOPR, with short-term holder SOPR, which the short-term holder is between 1 hour and 155 days, and it shows at the moment it's long below 1, which I use the SMA again. The reason is these people are continuously selling at the loss. Short-term holders can be really useful if you want to see what's happening with the market, especially short-term holders now. If you consider the 155 days, they bought between the range of between 20,000 to 29,000. If they're selling at the loss, that means that's not a good sign. There's so much fear, and the downturn trend might actually continue. There's another metric you can check. It's about spend output age band USD, which you can find it again at CryptoQuant, which you can see, for example, if there is any coin or token was sold that was 10 years old, which you can see there was a spike in here at 8th of June. So there's around $38 million worth of Bitcoin were sold at this price. So this can be really useful, that if you check it daily to see if there was like an age band sold their Bitcoin at like some point to get an idea if there was a selling pressure from which side was it. Because if there was from the long-term holders, that could be a really bad signal that, hey, maybe this downtrend will continue. Maybe it's got to be real bad. So it kind of gives a little more confirmation who actually sold their Bitcoin. Was it in a profit? So you can realize what was it in a profit, or if it was not, you can see it in adjusted SOPR. But if it was, then you can go and check on the spend output age band to see which one was it. Was it from 6 months to 12 months? Was it 3 to 6? Nothing. So you can see it was a 1 month to 3 months. There was a massive spike in here, and we can double check in here as well. I just said SOPR. Even you can check the short term, because the 3 to 6 months considered as a short term, because this is 155 days. So you can see there was a massive loss, and this age band was the one who sold this Bitcoin. So at the moment, it was not a long-term holders, it was a short-term holders. Next metric that I'm going to explain is about the exchange Netflow, which at the moment is a little bit flawed. The reason that I don't really give that much of a credit, because there's so much fraud from SEC to all the major exchanges such as Coinbase and Binance, and the net flow is going to be down anyway. Usually when we're in a normal situation, if the net flow is down, that means it's good for for the crypto market. The reason is, if there's a less Bitcoin going to the exchanges, that means there's going to be less selling pressure in general. But at the moment, I'm just going to introduce this exchange net flow and what does it mean. But it doesn't have much of a credit right now. So that's why if someone gives you, like, say, exchange net flow is like all-time low, like something like this, like 2 years low or something, it doesn't really mean that much. So you have to consider this. If you heard it from someone, you have to understand what is the fundamental behind of it. The next thing we go to explain is about exchange ratio. What it shows is that how much whales sending their Bitcoin on the exchanges in order to basically sell, because the whales usually selling the Bitcoins onto the exchanges in order to sell. If you see like a spike, especially when when the price reaches a supply or demand zone, you see if it's going up or down. That's how effective. Especially you can use it on a daily or weekly time frame. And this one has a little delays, because the whale don't really sell it right at the top. They're slowly selling it. They slowly send their Bitcoin into the exchanges, and they're slowly taking it out. So you have to consider this as well. You have to mix with technical analysis to see if the price already reached on a daily or weekly time frame, and maybe a couple of days after to see how does it react. Does it going up? If it continues the trend, have an uptrend, that gives us a signal. Maybe whales are slowly sending the Bitcoin onto the exchanges to sell. And lastly, we got to check about the option market to see where the calls and puts. At the moment, $30,000. The $30,000 is going to be for the strike price. That means it's got to play as a massive area of resistance, and one of the strongest is for the 24,000 as a strong support level. I hope you learned something from this video, and I hope that I proved it already to you guys that you can find all these metrics, which is this one is a metrics.derabit.com, which I forgot to mention the name of the website. You can find all this information for absolutely free. You just have to increase your knowledge how to use it, and gradually when you try to follow it up every week, you learn something. You may actually improve your strategy, depends on it. I hope you enjoy this, and until further videos, bye.